Hello, investors. It is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Sunday, August 25th, 7:30 p.m. coming to you from Fort Lauderdale with this weekend's with Revere Weekend Walkthrough. So, jumping right into it, the market trend gauge, market leaders, short-term trend, medium-term trend, and long-term trend are all bullish uptrend green arrows. Just markets have been really healthy ever since the recessionary fears abated and Powell's dovishness, as well as the Bank of Japan saying they won't raise rates as long as the markets are unstable. And it's been a V-shaped recovery so far, and we're starting to finally get some signs of consolidation. That's really starting to help some stocks set up tight right sides and pivots. So we'll definitely take a look at a bunch of stocks, just a small universe of 15 names. There's definitely more, but there's only so much time we can spend in this video. Jumping right into it, the S&P 500. Like I said, we had a mini crash following recessionary fears in the yen carry trade unwind, but those fears were put aside and the market has staged a V-shaped recovery so far, reclaiming the 8, 21, and 50-day moving averages, and those are aligning in bullish uptrends. And we're starting to put in consolidation with these previous highs as a key level. We had this one outside day reversal, but it was on lower volume. And then yesterday or Friday, we had an inside day on an up day, up 1.15%. And you could actually call it an accumulation day. So we had a follow through day here, then a follow-on follow through day here, and now we had another accumulation day. So definitely the picture in the indexes have turned from distribution to more accumulation. The Qs, a bit weaker than the S&P since the S&P has financials, utilities, staples, and other industry groups, while the Qs are mainly tech dominated. Also, somewhat of a V-shaped recovery, really starting to form a nice cup here, and this chart looks very similar to the video, forming a nice tight pivot right above the 50-day, this key 475 level we've been talking about, as well as the 10-week moving average, which is at 474. So there's a lot of confluence and support underneath, and taking out these highs about 485 would send us to retest previous all-time highs. And this definitely looks constructive right now. The Dow, did we get a new all-time high close? I think maybe just about. No, we missed it off like 20 points for a new all-time high close, but we're pretty much right at it. The Dow definitely leading, along with the mid caps, which is almost back into new highs, as well as the Russell blasting off after Powell's dovish Jackson Hole speech Friday. All interest rate names definitely saw money inflows, and we'll talk about a few of those sectors and then some stocks later. The VIX, as we've talked about, the biggest 8-day crash in the VIX ever. That's a testament to that V-shaped recovery, and we just continue to leak off here. The lower the VIX goes, the smoother the uptrend. So let's see this get back below the 200-day moving average into the 11 to 13 zone. And that'll really provide a nice, healthy uptrend with low volatility and nice trends. The dollar continues to slide off, and now we're really breaking some key weekly levels now. If we break this 100 level, we're definitely in a quote-unquote bear market for the dollar. I wanted to show a cool relationship between the dollar and Bitcoin. I'm sure the correlation stands with equities too. So every time the dollar breaks a huge support range, that coincided with the last bull market leg in Bitcoin post halving. And so that is precisely what I'm looking for in Bitcoin. I'll get to that chart in a little bit. And since Bitcoin correlates quite heavily with equities, it seems pretty favorable that the dollar is breaking down here. Gold, new all-time high, was made this past week. Just healthy action, really nothing else to say. Gold miners, broke out into new 52-week highs, pulled back in, and now forming a higher-ish handle. It still looks really constructive. Taking out 40 would send us higher for sure. Silver, definitely looking a lot better now after reclaiming this 2609 level. It's starting to be a shakeout +3, and taking out 29 would be a double bottom breakout to the upside, and that would definitely send us to higher prices. Look at a monthly chart, silver's not close to all-time highs yet, as we hit almost 50 in 2011. IBIT, nice undercover reversal of that, as I've been talking about for weeks. Then we formed this load sheet and broke out of it, reclaimed the 50-day. On huge volume too. Talk about that correlation Bitcoin with the dollar breaking down. This looks like we're going to head up back to the 40 area. And I would look for a consolidation pivot up there. After that, the next level is 41 and then 42, and we're into blue skies. So to take a look at the actual Bitcoin chart, that key level I've been talking about, 56,500, that was the key undercut reversal or reclaim. It's tested that area multiple times now. Second time, third time, both times reclaiming it. So that's definitely the key level now to watch out for. We blasted out this load sheet of the 50-day, 10 and 20 and 200. We're currently consolidating right at the all-time high anchor VWAP and still finding resistance at the 65,000 level, which if you look back, happens to be the highs in April of 2021, where we hit 64,899. And right now we're just about right there and rejecting it. But if we take out 65,000, I would expect us to see the 69,500 to 70,000 level, take that out, 72,000, and then finally 74,000. And that coincides with the IBITs 40, 41, 42. And definitely going to be looking to get that into the portfolios. Solana as well is another main coin reclaiming all moving averages. That looks actually really good. Retested the all-time high anchor VWAP, down support, and now building the consolidation here. Looking great here as well. Let's go on. Let's talk about bonds. Once again, I'm going to use TradingView because it's better. The 1-year yield rallied and then broke down after Powell's dovish speech. Market is pricing lower rates now, and that's quite evident in the action and in the Fed speak. Economy is also slowing. We got that minus 818,000 revised number down from the BLS, and the 10-year is definitely showing that inflation is coming down as well as growth expectations, and bonds are flagging for a breakout actually. Looking at the high yield Bank of America index, this has a really nice inverse correlation with equity. So seeing this come off more, that'll definitely ignite another equities uptrend after already this super strong trend. And credit spreads have definitely narrowed, which just showed that it's a risk on sentiment. You had that spike to almost 4% between the Bank of America high yield and the 10-year, which showed some fear coming to the market, but that quickly subsided. Continue on. So I talked about yields, talked about bonds. We'll quickly go over some stocks and then we'll end off with quick synopsis of the earnings and then economic calendar, and then we'll wrap it up. So charts of interest. First one, the first few stocks I wanted to go over is the alternative energy space. They're starting to come back to life after a huge prior move up. First one is NRG. It's gone on weekly. As you can see, from 40 to all the way to 80. So nearly a double in a matter of about 9 months. Definitely a slower name, but liquid and big enough for us. Saw some ants here as it made its uptrend. Then it put in this really nice base. And we're currently in a 4-month base, putting this really tight right side right at this 84 level. So definitely going to look for position over 84 and then top it off over this 87.58 area. RS line is looking to break out as well, and above all key moving averages. Next one in the group is VST. Double bottom base over 96 is definitely a buy. We could have cheated in here 2 days ago. This definitely could form another pivot before 96, so that could be another area to buy. It also staged an undercut reclaim of these 82.33 lows, and this looks great too. A lot of ants on the way up as well. CEG, another one. As you can see with group moves, the charts often look very similar. That's just how the money flows with institutions into these groups. They buy in baskets. This one over 200 is what we would call a lower pivot or a lower chi pivot. You can take that. That's also coincides with the UNR of this 196, 199 level. So that could be a buy there. GEV shook us out, or shook some of us out. Reclaimed. So this is a ugly trader. So probably more of an avoid, but still watching in terms of the group. First Solar is also alternative energy, and this is the level I'm watching. Draw a weekly level, the previous all-time highs. That coincides with this 230 level, which is right here. So above, honestly, previous high of the day, so last Friday, start a position. Since the 50 days of the downtrend, you might see a bit of frustration. So maybe it comes up to 250 and then it has to back and fill, let the 50-day move into the uptrend. And has decent earnings and sales as well. 104% year over year in the latest quarter, 450% last quarter, 25%, 45% in the last 2 quarters in revenue growth. And so that's a fifth alternative energy name I am watching. Now on to a few sector ETFs. The first one is XBI Biotech. This is forming a really beautiful cup with handle in a stage 1 base, breaking out of this 103 area, and you can put on a full position. I'll be looking at LabU over those highs. Carry is another interest rate sensitive name. Came out of this really nice, this pseudo cup with handle. Interest rate names doing really well. IWM as well encompasses biotech, regionals, home builders. So all the interest rate sensitive names broke out of this area on volume, and this looks great. Let's see if this follow through is to be something more than every other time small caps broke out, only to break down again. Mid cap, same story. Broke out of this 558 level on volume. Let's see if we can continue, or if it just becomes something that falters quickly. Home builders as well. We own 5% in ITB, broke out into a new all-time high close, but not quite a new all-time high yet. But looking great, and in an easing cycle, home builders often can move like growth stocks, like we saw after the great financial crisis. Kava, we own, took half off before earnings, but we have still about a 1% position left. This is fantastic action out of this base. Highest volume ever on great earnings. I love this food, and they're definitely expanding quickly across the country. They're still missing a store in South Florida, so I hope they bring one in. And it's definitely a huge market down here. So Kava has definitely a big opportunity to grow into a bigger story than it already is. ANET is another one of those AI hardware names. Honestly, this has been a rough trader. Every time it breaks out, it just backs and fills. Breaks out and then backs and fills and retests the level. But it's definitely a leader. Over those highs, you can try a position. Core Scientific is a combination of AI data centers and crypto over this level. Arguably, you could have bought it last Friday, but you can also take it over last Friday's highs to get some indirect crypto exposure and AI exposure. I love IPO or spin-off bases that turn into high type flag. It broke out, failed, so now it's building a larger base. Even had a base filler and reclaimed. Definitely sucked in some buyers, shook out more weak holders, and now maybe it'll actually work this time. The IBIT ETF is definitely something I'm on watch. Maybe you can form another pivot here and then take out that, or this just comes up to this 40 level quickly and then has to do some back and filling before attempting a breakout. And finally, ONON on shoes broke out this 44.3 level into new 52-week highs. And this looks great too. Look at the earnings acceleration line. Last quarter earnings came in at 248% year over year, 27% sales growth, 10% margins. And I've been seeing a lot of these shoes everywhere in the gym and just in lifestyle, seeing people on the streets, and more ON shoes are popping up. So moving up quickly on the earnings now, we covered the indexes, inter-asset correlation, some sectors and some stocks as we normally do. And now let's go into earnings. PDDs before the open. Nothing really after the close that's significant. After the close, Tuesday, I guess you have Sentinel 1. Honestly, nothing too much there. But the big one is Wednesday after the close is NVIDIA. That is pretty much what everyone is watching. It's one of the biggest stocks in the world, and it'll heavily impact all of semiconductors, which will then impact at the S&P and NASDAQ. So that will be key. And some scenarios, we'll probably likely see a beat and raise just because of the sheer demand in their H100s and their other GPUs, their next gen GPUs. But if the market reacts poorly, that could really signal potential top in the cycle. So you do not want to see a beat and raise and extremely strong numbers, but the market gaps down. That would likely signal that there's a current top in this AI theme. And then before the open, we also have Abercrombie and Fitch. This has been a leader this entire bull market as well. So we'll see how that retailer does and if the trend in their clothing continues. And then CrowdStrike, remember we got the market punished CrowdStrike for its mistakes in its cybersecurity platform. There's some issues with their code that kind of messed up so many Windows computers and companies. Millions and billions of dollars were lost in the process. We have Salesforce, Affirm as well. Affirm deals with interest rates, so we'll see what Affirm does. Actually, let's look at the chart real quick. It's just in a huge base. Honestly, a really odd downtrend. Super orderly lag that I've really never seen before. So maybe we get an earnings gap and this goes on for another run as well. What else? PSTG as well. We've traded that before, had some nice profits. Before the open, we have Best Buy. So before the open Thursday, we have Best Buy, American Eagle, another retailer, Dollar General, Ollie's, Burlington, Birkenstock. So a lot of retailers that day. And then after the close, we have Dell, Lululemon, Ulta, Marvell, Gap, MDB. So still a lot of retailers this week, and it'll give us a picture of how strong or weak the consumer in the US is. So finally, let's go over major economic data points this week. You have consumer confidence Tuesday at 10 a.m. Just some Fed speakers as well. Thursday, we have GDP, retail inventories, jobless claims. And then Friday, we have PCE and core PCE. And that's one of the major indexes that the Fed looks at to gauge inflation. So that will definitely be a high impact number for the markets. And then in September, we have the Fed with its FOMC meeting where the markets are looking for the Fed to cut rates for the first time in this hiking cycle. So this PC number will definitely be important, and we'll see how that comes in. So we're gonna wrap this video up this weekend. Oh, by the way, Connor's not here this weekend. His family's in town, and I'll be out of town next weekend, so he'll take over that video next week. As always, we would love to hear from you. My email is ted@revereasset.com, and then you can reach out to Dan and Don at revereasset.com. You can also follow me and Connor on Twitter, Ted H. Zhang and Connor Bates _, or you can call us at 855 Real Wealth, and that is 855-732-5932. And if you're interested in becoming a client, please reach out as well, and we'd love to take questions or even go over your portfolio with you. And this is Ted Zhang with Revere Asset Management, telling it like it is. Thank you for listening, and have a great rest of your weekend.